Hello ladies and gentlemen, welcome back to the channel. I just wanted to do a quick today in the stock market video on just some of the news that's been going on today and some of the, monotony of the stock market and being an investor currently, nowadays, and just the fact that it's both a very interesting and a very boring time to be an investor in the stock market. So before we get right into that, if you guys haven't watched my video I put out yesterday on investments to be making during a recession or before a recession occurs, go ahead and watch that video. Full of a lot of good content. Not a lot of people did see that, and I did thank you guys in the video in that video, saying because of the fact that in my previous Disney video I did get quite a few subscribers from that video, so I do appreciate that. If you guys aren't already subscribed, go ahead and hit that subscribe button and join the finance family and continue to learn and grow with us in the stock market. So also go ahead and smash that like button to help the YouTube algorithm to get my videos pushed to other people so we can all become millionaires one day, because that's the goal if you're watching this channel. So let's just get right into it. As you guys see, the Dow is down about 102 points today, or about 0.36% from yesterday, and I believe we did pass 28,000 yesterday. Yeah, as you guys see, so we dropped quite a little bit from the highs yesterday, and it's just something we see just about every day now. The biggest news that came out today is U.S. stocks slip from records on earnings and doubts about China trade war. And this whole concept of the trade war is just kind of ridiculous, because tomorrow we'll hear something that, oh, there's been a breakthrough and nothing really comes of it, and then the next day we'll hear something like Trump threatens China with higher tariffs if a trade deal is not completed. It seems like that's just something we've heard over and over and over again, and it kind of knocks the market back down, but the next day it may be back up. So it's just kind of a boring time. It's exciting to see the movement, but it's also kind of boring when it's the same kind of thing that's moving the market every single day. So let's just read this real quick. U.S. stocks slip on the trade war and earnings. So there's some of the indices that you can see there. What's driving the market? Doubts about substantive progress on a partial trade deal with China ahead of December 15 deadline for the increase of import tariffs begin to undermine bullish sentiment against Tuesday, with U.S. economy growth slowing. So, like I said, this is just the concept we hear every single day for like the past 2 months. We've heard good news and bad news, good news and bad news, good news, and then maybe some streak of bad news. And I felt like they've kind of reached an agreement before, but now it seems like they're not reaching an agreement. So it's just back and forth, and it's really affecting, as I said, the market and farmers and things such as that. And then the second thing we see is, I believe, so it looks like these stocks have risen back up. This might be their after hours, yeah. So as you guys see, I believe at one point today, Kohl's was down about 10% on their earnings. Okay, so this says 18% on week same store sales. Home Depot was down about 5%, I believe, as well on earnings. So it says Wall Street also was digested on a mixed earnings picture. Home Depot shares dropped nearly 5%, as you guys see there. Stock declined, shaved off 80 points for the Dow. Kohl's, meanwhile, tanked 18% on the week's same store. However, in U.S. economy data, U.S. home building rose in October, and permits for future home construction jumped to a 12-year high, which I've seen a lot about around the area that I live. So many houses are being built, so many new neighborhoods, all sorts of different things being built and established. I do think the housing market's very good right now. I still think the housing market's very hot. Now, that doesn't mean go out and invest in real estate necessarily, because I do think it's at a high. I think houses may be overinflated a little bit, but I'm nothing super to be worried about. Housing starts rose 8.5% on a year-on-year basis in October. Building permits surged 5% to a rate of 1.461 million units in October, the highest level since May 2007. Which, when you put it that way, that's not a very good thing to see, because obviously in 2008 and 2009 the housing market crashed. The housing market has picked up in recent months after the Federal Reserve lowered interest rates, pushing down mortgage rates. So essentially, that's all that happened today. I'm not too worried about Home Depot dropping. I'm not too worried about Kohl's dropping. I think those are still going to be valuable companies, especially Kohl's and Home Depot. If renovations may not necessarily be a necessity if a recession were to happen, but they do have some things, basic necessities that some people will still continue to buy. And Kohl's offers cheaper clothes at a good, I believe they're a department store, so they offer cheaper clothes that are good quality. They have Nike, Under Armour, all sorts of name brand stuff, Levi's, all sorts of good name brand stuff. That they're offering for cheaper prices from their competitors. So I'm not too worried about either of those stocks. But like I said, it's just kind of up and down with these trade war talks. And it's a little bit ridiculous. So let me know what you guys think about that in the comment section below, whether you guys are enjoying the state of the market currently or whether you guys are kind of over it like I am. But it is what it is. It's just the life of being an investor. So if you haven't already, go ahead and smash the like button and hit the subscribe button. Leave that comment in the comment section below on what you guys' opinions are. And until next time, guys, happy investing.